The stock on our radar right now is up 7% in this week itself. Nitesh Estates, we're joined by the ED and COO Ashwini Kumar. Remember, they had recently signed an MOU for a 130 crore project in Bangalore for about 300 residential units. Good afternoon, Mr. Kumar, and thanks a lot for joining in. The first thing I want to know from you is that what is the average ticket size of all these residential units, considering if we just do a simple division, it comes up to around 43 lakh rupees per unit. So is that a fair assessment? And are these residential units luxury in nature or affordable housing projects?
This is going to be priced at the lower end of the market, suitable for mid-income segment. In terms of the project size, in the ticket size, we will price it around a little less than the 50 lakhs rupees bracket, bulk of the units, so that the customers can take advantage of that additional 50,000 tax incentive which has been given during the recent budget. So that is how our strategy will be in terms of the pricing for this particular project.
Okay, so the ticket size of each flat or unit will be less than 50 lakhs. But Mr. Kumar, could you tell us that from a consumer point of view, yes, there will be a lot of tax savings at least. But for your company, when you build houses, residential projects, which cater to the low cost or affordable housing, how would the margins be? Can you tell us the margins this particular project versus your average margins?
We will be able to get a margin of roughly about 750 to 800 rupees square feet. And if I look at it in terms of, let's say, on 130 crores of turnover, which is our economic share, we should be able to get about 40 crores worth of contribution for this. And the allocated costs are not going to be significantly higher, because here the percentage of addition is not significant. So that is how it will be. Okay,
but 40 crores on total revenues of 130 crore would be margins of close to about 30%, right, at the EBITDA level?
That's right.
So that would be far superior to then the average company margins, which hover in a range of what, 20, 21, 22%. So this is more lucrative for you.
Yes. No, what has happened with the existing projects is that currently, if I look at it from our current portfolio, which is under revenue recognition, that is far lesser than the actual amount of activity which is happening. So as the revenue size starts going up, then we will find that even the EBITDA margins will start going up.
So in that case, could you then tell us what the unrecognized income is or unrecognized revenue is? At the same time, what's the kind of inventory you're currently sitting on?
Yeah, our current portfolio is roughly about 4,600 crores. In that, we will have roughly around 3,100 crores worth of revenue, which is still not recognized, and that will pass through the P&L over the next 4 years.
All right. Could you also then tell us that what the debt on your books is, considering the last time we spoke to you, it had risen substantially from about 390 crores to 800 crores. So what's the debt update there?
The debt is currently at the same level. And I had explained that the debt levels had gone down largely on account of the acquisition of the Pune Mall. At that point of time, the debt had gone up. That was one. And there was also a reason related with the fact that, there were certain compulsorily convertible debentures, which when we were retired. So that did, see the interest cost at one point. And that also impacted the profitability of the organization.
Okay.
So so that also had contributed to the rise in the debt level.
Sure, fair enough. Just one quick question on the business then. How has Q4 shaped up for you this Jan to March quarter, in terms of revenues, in terms of sales, in terms of new offerings?
Yes, I think Q4 will be somewhat around the same levels as what we have seen in the previous quarter. that's how I expect that it'll pan out. And as we get into the next year, particularly Q2 onwards, then we will have newer projects which will fall into revenue recognition. So that will start then increasing the revenue recognition.
All right, but finally, Mr. Kumar, before we let you go, there is an expectation of the passage of the amended real estate bill going forward for the real estate regulator. What kind of impact do you think will there be on companies like yours, because it's more pro-consumer? So will that be a negative?
I think we will have to prepare ourselves in terms of the new processes. So it is going to be the internal process of the company that will have to be entirely overhauled so that we are able to meet the new requirements. So from, after the RERA becomes actually enacted, then after that the government will also have to put their structures in place. Each of the states will have to have a regulator, and then they will determine also the processes. So some of those things we'll be able to know only at a later stage, but we are fairly well prepared internally in terms of the fact that yes, we will have to modify our processes, and we feel that it will be better for organizations which have a better, let's say, a brand equity in the market. It might be, right now if you look at it in Bangalore itself, there are more than about 300 to 400 developers. So some of them may not be able to cope up with their requirement, and the number of developers which are there in the market might reduce actually.
Okay, Mr. Kumar, we'll leave it at that. Thanks so much for your time as well as perspective on the company as well as on the sector. So that's Nitesh Estate on the company's 130 crore project announcement in Bangalore, on which they can achieve an EBITDA of 40 crore. So that's an EBITDA percentage of nearly 30%. And they're sitting on 3,100 crore of unrecognized revenues, which should start kicking in Q2 of next financial year. Time